Imagine two people starting with exactly the same amount of money. Both invest $10,000 on the same day. The first spends every morning watching charts, chasing market momentum, reacting to every headline, and placing trade after trade, believing that more activity means more profit. The second buys high-quality assets, ignores the daily noise, and simply stays invested while focusing on patience and discipline. 10 years later, one has built lasting wealth. The other is still searching for the next winning trade. The question isn't who made more money. The real question is, why? Because one of the biggest myths in modern finance is that making more trades automatically leads to making more money. In reality, the wealthiest investors in history rarely built their fortunes by constantly buying and selling. They built them by understanding something far more valuable than the next market move. They understood time. Today, we're breaking down one of the biggest debates in investing: day trading versus long-term investing. Not from the perspective of social media influencers, but through the lens of psychology, probability, institutional behavior, and how wealth has actually been built throughout history. By the end of this video, you'll have a completely different way of thinking about money. Let's begin. Most people are attracted to day trading for one simple reason: speed. The idea of making money in a few hours is incredibly attractive. Social media is filled with screenshots of traders making thousands of dollars before lunch. You see luxury cars, expensive watches, and claims of turning a small account into a fortune almost overnight. What you don't see are the thousands of losing trades. You don't see the months of frustration. You don't see the emotional exhaustion that comes from living every minute according to the market. Professional trading is one of the most demanding professions in finance. It requires discipline, emotional control, statistical thinking, and years of experience. Yet, many beginners enter the market believing they can outperform professionals after watching a few online videos. This is where reality begins to separate from expectation. Every trade carries costs, commissions, spread, slippage, taxes in many countries. And perhaps the biggest cost of all: bad decisions made under pressure. The more decisions you make, the more opportunities you have to make mistakes. Now compare that with investing. An investor is not trying to predict what happens tomorrow morning. An investor is asking a completely different question: which assets are likely to become more valuable over the next 5, 10, or 20 years? This single shift in thinking changes everything. Instead of reacting to every headline, you begin focusing on long-term trends: technological innovation, economic growth, corporate earnings, scarcity, demographics, productivity. These are the forces that have created enormous wealth throughout history. Think about companies like Apple, Microsoft, Amazon, or Nvidia, or assets like Bitcoin. The biggest fortunes were not made by perfectly timing every price movement. They were made by identifying long-term opportunities and allowing time to do the heavy lifting. Time is something most people underestimate. Albert Einstein supposedly described compound interest as one of the most powerful forces in the world. Whether or not he actually said those exact words, the principle remains true. Compounding rewards patience. Every year, your gains begin generating their own gains. The process starts slowly, almost invisibly. Then, suddenly, it accelerates. This is why wealthy investors often appear to become rich much faster during later years. They're not working harder, their money is working harder. Now let's look at institutions. Many people imagine that large investment firms spend all day making hundreds of rapid trades. In reality, most institutional portfolios are built around long-term allocation and disciplined risk management. Yes, professional traders exist, but the world's largest asset managers oversee trillions of dollars, by focusing on diversification, research, and capital preservation. Their goal isn't excitement. Their goal is consistency. Consistency builds wealth. Excitement often destroys it. This doesn't mean day trading is impossible. There are successful traders, but they are professionals operating with strict systems, defined risk limits, and years of experience. They don't gamble. They manage probabilities. Unfortunately, most retail traders do the opposite. They increase position sizes after losses, they chase momentum, they panic during corrections, and they confuse luck with skill. Successful investing requires a completely different mindset. Patience instead of urgency. Discipline instead of emotion. Planning instead of prediction. One question can completely change how you approach money. Are you trying to become rich quickly, or are you trying to become wealthy permanently? Those are not the same objective. Quick profits create excitement. Long-term wealth creates freedom. The market will always tempt you with opportunities that appear impossible to ignore. There will always be another rally, another crash, another headline claiming that everything has changed. But history shows that disciplined investors who stay focused on quality assets, proper diversification, and long-term thinking have consistently outperformed emotional decision-makers. The greatest investment isn't finding the perfect trade. It's developing the mindset that allows you to stay invested when everyone else is losing control. Because markets reward patience far more often than they reward excitement. At Whale Mind HQ, we don't chase noise. We study capital. We study behavior. We study the principles that have built wealth for generations. The goal isn't to predict every move. The goal is to make better decisions than the average investor. Because in the end, financial freedom is rarely built in a single day. It's built through thousands of disciplined decisions repeated over many years. If you found this analysis valuable, support the channel by subscribing and joining a community that believes knowledge, patience, and disciplined investing will always outperform hype in the long run.